What's up, YouTube? So in this video quickly, I just want to show you how to either trade stocks or buy stocks. Okay, there are two. This tool is different. Okay, trading stocks is more risky, but you can make a lot of money quickly from trading stocks. But in the case of investment, it is less risky, but you will have to hold your trade, your stocks for a long time, and the profit or earnings that you are likely to make may not be as it's not going to be as much as that of trading. Okay, trade you make a lot of money quickly, but it's very risky. But investment you can make a lot of money as well, but it's going to take time. Okay, it's going to take time. You have to take hold your stock for a long time, and the profits you make from it too can be very small compared to when you trade. So but most the two are okay. Okay, so if you are an African, because this video is actually dedicated to my African brothers and sisters, because I know how difficult it is in our own part of the continent here. So because of that, I want to tell you this video is for you guys. I want you to watch it so that you can start making some money for yourself. If you are in Nigeria or Ghana and you intend to invest, okay, you can use Bamboo app. Bamboo app is okay. You can access US stock, ETF, and all those kind of things on Bamboo app. I use Bamboo app myself. But if you want to trade individual stocks, you can use SNES. I use SNES for trading stocks, and I also use Bybit as well to trade my stocks and equity markets. Okay, I use Bybit. But for individual stocks, I use we advise you to use XNES. Okay, so that being said, I will take you to my computer screen now so that you can scrutinize how you can scrutinize those value stock. Okay, something I need to say quickly before I go to my computer screen. What I'm showing you, or what I want to show you in this video, is what Warren Buffett do. Warren Buffett and his friends and co. That's what they do. They call it value investing. You know, they look for stocks that are companies that has the potential of growing, okay, over the years of growing. But right now they are undervalued. People they are selling stocks cheaper. Now their stocks are cheap now, and these companies are likely to grow. So their stock is very cheap now because they are still seen to be undervalued. Okay, let me give you an instance. Okay, it's just like you have somebody offer you a box with $100 inside that box, and they are selling you that box for $20. Okay, $100 inside the box, and they're selling you the box for $20. That is to tell you that the box is more valuable. It's more valuable than what they are selling. So you look for those kind of box and buy. At the end of the day, you make money back. When you buy it, it's worth $100, so you know how much you make from that. Okay, if you do the math. So that is exactly what we are talking about here. How to do for those stocks that has the potential of generating huge return. Okay, but right now they are being sold cheaper because they are seen to be undervalued. So that's what we call value investing. If you can read more about it, this is what Warren Buffett and so many rich investors are doing. So if you are not investing, you can also use it to select good stock to trade. Apart from investing, you can also use it to select those stocks and you trade. You buy the stocks and then you hold it. Even if you are a trader for weeks, for days, for months, you can hold it and then you can keep moving your stop loss along the way. And if you want to invest, you can just buy it and then keep it and keep holding it and look for more of those stocks and buy, so that you can diversify your portfolio. Hold more of those different stocks in that light. Okay, so enough of my story. Let's just go back to the computer screen and let me show you how to do this. So what you just have to do is that when you come to this website, vimz.com, this is the home screen, then come to screener here. Okay, come to screener, and then when you come to screener, so we'll be looking at, because there are different ways in which you can filter, to scrutinize, to get those companies, to bring out those companies that we are looking for, those companies that have the potential of generating more revenue, for generating more money, that are selling at a cheaper price right now. So to scrutinize, you have to come to fundamental. There are many ways to scrutinize stocks here, but we will be looking at fundamentals. We want to be looking at so many information here so that we can get the best. The first information we'll be looking at is price to earnings. So how much you are willing to pay for every $1 earns in this company. And the lower it is, the more you are when it is the lower, it means you are paying cheap money for every dollar earned. So here, so you can set it to under 20, but I always set my own to under 10. That is where I usually put my own. I always set it to under 10. Then another thing that you need to fill in is PB, price to book. Okay, price to book means that the stock is selling for the stock is selling less than the stock is selling less than its value. Okay, so and this you usually set it to under 1.5, but I don't think we have 1.5. So maybe you should just put it under 2 is fine. You can put it under 2, that is fine. Okay, then the next one is price to sell, how much you are paying for $1 sale. Okay, the lower it is, the cheaper mean you are trying to purchase this stock for a cheaper price. Okay, so that is PS, price to sell. Okay, this is it. You are going to put it under 2. Okay, under 2, which is the best level price level that you are supposed to put it. Then the next one is debt to equity. So this debt to equity, we want to be sure that this company is not owing too much debt. In fact, it's not owing debt. Actually, there is no company that doesn't owe debt, but you want to make sure that the debt can easily be paid back by this company. It's not overwhelming. It's not a debt that can make them go bankrupt. It's not a debt that can make them that can incapacitate them as a company. So you want to make sure that they are not owing debt. So for you to checkmate that, you have to check this debt equity, okay, and debt to equity, and make sure you put it at under 0.5. Okay, under 0.5. Okay, that checkmate that for you, that these stocks, they are not they basically they check the debt aspect. They are not owing, they are not being they are not in too much debt. Okay, so now the next most important part is return on equity. Return on equity, ROE. Is it return on equity? Yes, return on equity. And what does this do? um Funny enough, I can't find it here. Okay, I've seen it. Okay, return on equity. So return on equity, what return on equity means is that you want to be sure that this company are making money on they are earning, they are making profit. Okay, they are making profit. They are making profit. So and you want to make sure that they are at least that is based on at least over 10%. Okay, you can put it more than that. You can make it over 20, you can see over. So anyhow, but let me just put it at over 10%. Okay, let me put it at over 10%. 10% is okay. You can put your own over that return on equity. You can put it more than that. You can put over 20 and all that. So but over 10% is okay. That shows that the company is making returns, they are making money, consistent money. Okay, so the last part is earnings growth in the past 5 years. This earnings growth, okay, which is also known as EPS growth past 5 years, meaning are this company to are they making money consistently in the past 5 years? Have they been making money consistently? Okay, have they been making money consistently? Have they been growing? So that's to tell you, that's one is to checkmate that these stocks have been consistently making profit and making money and making money and making money and making money. So how do you do that now? You come to EPS growth past 5 years here, and you can put it over 10% too. You can put it over 10%, just like here, over 10%. Okay, and then that is the last part of the stock. That is the last information. So now here are the stocks that actually fit into that category. You can have Axlesis Technology. This is a semiconductor equipment and material, and it is in US. This is a Agbes Corp. This is a trucking company in USA, and this is a regional bank, Axo Financial. This particular one is a company that I was looking at some few days ago, trying to buy. If you look at the technical charts of this company, let me show you something. You come to charts, this chart, if you click on chart, you will see this company and how their chart looks like. Okay, so this is Axos. It's selling for 63 now. The price is at 63. So it's on a downward trend now. So it's actually on a long trend. It's actually on a trend. Let's look at our chart. Let's bring it out on our chart so that you can probably see what I'm saying. Okay, let's look at our chart. So Axos Financials. Axos Financials. Okay, this is the company. Okay, so let's check it out. Okay, so this is the company. If you, let's put it on daily time frame so that you see that the company is actually in a is in an uptrend. Okay, let's put it in weekly so that we can better see the company properly. Okay, and see the company is in an uptrend. Okay, it's in an uptrend. You can see it's in an uptrend, and at this moment, okay, at this moment it is retracing. Okay, and it is at 63. Okay, $63. So now will be the best time to buy this kind of stock or trade it. Okay, I mean, okay, want to mark this particular support. Okay, so now you could trade. Okay, you could decide to trade this market from here. You could buy from here. That is if you want to trade it. Okay, if you are trading, you can trade from here, just your stop loss below here, and then your take profit can go as far as above this level. Okay, you can hold the position as long as you can. Hold the position as long as you can. If you are investing, just buy it and leave it to run for as long as you want. But if you are a trader, you can target your first take profit around here. Okay, this is a crazy risk to reward ratio kind of trade. Okay, so you can do that. And if you want to read more about the company, you can just check here. Got cash. Here is where to find it of 4% or more. Now as a financial director acquires 3,000 shares. You can see that's that people are buying their shares. These are good news for the company. All you need to know about a financial rating of great to buy. So these are, you can read more, you can check more events and read more about this company to see to understand people's sentiment about the company. Are people buying their shares? Are people looking to buy more of this company shares? Okay, buying of shares, acquire 3,000 shares shows that they're probably doing well and people are putting money into this stock. So this is how to scrutinize and come out with a good stocks that you can actually invest your money in or trade as a or take as a trader. So I believe this video is helpful. Don't forget to like and subscribe. I'll see you again in my next video.